Welcome to the first CoreLogic RP Data housing market update for 2016. The capital city housing market started the year off on a positive note, with dwelling values rising by 0.9% in January. The month-on-month lift in dwelling values wasn't enough to offset the weaker readings in December and November, which dragged the rolling quarterly rate of capital gains down 0.6%. The slowdown in growth conditions has been most evident in Sydney and to a lesser extent in Melbourne, where the pace of capital gains was previously exceptionally strong. Dwelling values are down over the past 3 months across both these cities, with a 2.1% fall in Sydney, while Melbourne dwelling values were down a more moderate 0.1% over the rolling quarter. The latest index values have propelled Melbourne's housing market into the #1 position for annual capital gains for the first time since 2011. The last 12 months have seen Melbourne dwelling values rise by 11% compared with a 10.5% gain in Sydney values. Perth and Darwin values have continued to move through the down phase after dwelling values peaked during 2014. Perth values were down by 4.1% over the past 12 months, while Darwin, where the market peaked earlier, saw values drop by 2.5% over the past 12 months. These were the only two capital cities to record a fall in dwelling values over the past 12 months. Brisbane's housing market recorded a 2.8% increase in values over the past year. Adelaide values were up by 1.1% and Hobart values were 2.3% higher thanks to a strong jump in conditions over the past 3 months, which saw Hobart dwelling values rise by 3%. Housing market conditions in Canberra have continued a healthy upwards trend, with values up 6% over the past 12 months, the third highest rate of value growth across the capital cities. It's important to note that the data flows don't really return to normal until February. Late December through to late January is characterised as a seasonally slow period for transaction numbers, which makes it harder to accurately gauge the performance of the housing market until activity starts to lift. Our view remains that the rate of capital gain across the combined capitals in 2016 is likely to be less than the 7.8% experienced in 2015, driven by a slowdown in Sydney and Melbourne, as well as continued softness in the Perth and Darwin markets. As housing market activity continues to move out of its seasonally slow festive period, we're likely to have a much better gauge on how the overall housing market performance is tracking through the new year. Until then, thanks for tuning into CoreLogic's monthly housing market update. If you want to stay up to date with your local housing market conditions, make sure you visit the research tab at www.corelogic.com.au.